Jim Rogers is here to share his lessons in investing from his new book, Street Smarts. Jim, welcome back.
I am delighted to be here, Mamta.
Thank you. You talk in your book about a disconcerting time at Balliol College involving a boat race and eventually facing a similar dilemma with George Soros at the Quantum Fund. Could you tell me how those experiences informed you?
Well, this experience with the boat race was that my father was asked to pay a bribe, which we didn't quite understand really what was going on at the time. So I withdrew. And then later in life, I found other times when I was presented what I considered moral dilemmas, and so my way was to withdraw. I don't know if that's the best way for everybody, but that's been my way.
In the 1970s, you describe how you took money that you made from your puts and then you shorted 6 companies. You said that wiped you out, but you said it was one of the most invaluable experiences of your life.
There's nothing like going broke, Mom, to make you focus. I assure you, yes. No, I lost everything. I thought I was a really smart guy. I made these wonderful investments, made a lot of money, and then I said, I'll do that again, and got wiped out. It shows how little I knew at the time. But it taught me how little I knew, and it taught me to be very careful. It taught me to make sure I knew what I was doing. And it also taught me there was lots of things I didn't know about the markets. And there's still lots of things I'm sure that I don't know about the markets. You know, I tell students all the time, it's very good to lose everything, but do it when you're young. You know, do it when it's $50,000 or $5,000, not when it's $50 million.
What was the first thing that you did after you got wiped out?
Well, first, I couldn't believe it was happening because I knew I was right. And it just shows how much I know. And so I stayed with it until I couldn't stay with it, until the margin calls were just too great. And so I had to sell, and to reverse my position. And I had nothing left. And then I was extremely depressed because I thought 4 months before I had been brilliant. I had done brilliantly when nobody else was making money at all. Very cocky, arrogant, got my timing right, I thought. And so I knew that I was a genius. I knew I was going to be the next Bernard Baruch. I couldn't believe how easy the investment business was. So you can imagine to go from that cockiness and arrogance to being totally wrong and wiped out within 4 months. It was a pretty depressing period of time.
Now, I know you're not a huge fan of hot tips, but everyone wants to know what you're thinking. The Dow closed above 14,000 on Friday. It's been selling off today. Is it going up or down?
How do I know? You should watch your show. Watch your network, for goodness sakes. You all know much better than I do about them. I'm a terrible market timer.
I need to ask you anyway.
I know you have to ask me. But what I would suggest you do is watch your network, because you guys have many, many smarter people than I. I'm the world's worst market timer. I'm a horrible trader. I wish I could get better at it. I even say to myself, okay, now you know you're always early, so just wait, just wait.
All right, where do you see gold going?
I own gold. It's up 12 years in a row. We've talked about gold before. What worries me partially is that right now the CFTC numbers, the Commodity Commission numbers, show that a lot of speculators have piled into gold in the recent several weeks. That's always a bad sign. So when you have a lot of people rushing into something, it usually means you should be careful, maybe even rush out. So I'm not buying gold. I've hedged a little bit of my gold. I've hedged a little bit of my silver. If it goes down, I hope I'm smart enough to buy more. If it goes down a lot, I hope I'm smart enough to buy a lot more.
What advice do you have for someone young that's just come into some money, but when do you think is a good time for them to start thinking about investing? How should they go about it?
It is never too early to start thinking about investing. Never, ever, ever too early to start thinking about saving money, especially saving money, and especially to invest. But don't invest unless you know what you're doing. It's a terrible, you heard my experience. I thought I knew what I was doing. I got wiped out. So please don't try to invest until you know a lot about what you're doing. Otherwise, you're going to wind up like me, getting wiped out. No, no, no. Money is very important and very misunderstood.
Thank you, Jim.
My delight.